There is only one thing that makes that paper cash in your pocket or the numbers you see on your banking app valuable: an invisible contract, which is trust. Throughout human history, we have had to trust the states that print money and the banks that hold and transfer it. But what if we were to eliminate all the world's banks, notaries, and intermediaries in a single night? It might sound like a chaos scenario, but this is actually the very essence of blockchain technology. Cryptocurrencies are not just a trading tool or a get-rich-quick opportunity. They are a mathematical revolution that fundamentally alters humanity's system of trust. Let's cast aside the market noise and social media speculation and look directly at the logic of the technology that is building the future of money and ownership. In its simplest definition, blockchain is a massive, transparent, and historically unalterable digital ledger that does not sit in a single center or company, but is held simultaneously across thousands of computers connected to a network. In the traditional system, when you send money to someone, the bank checks its own ledger, deducts it from your account, and adds it to the counterparty. This means all the power and data are in the bank's hands. On a blockchain, however, when a transfer is made, this transaction is written into a block of data, and all computers on the network verify the accuracy of this transaction using mathematical cryptography. Once the block is approved, it is added to the chain, and no one can ever delete, alter, or hack that record. That is exactly why blockchain is a system that removes all people and institutions from the middle, entrusting security entirely to code. This technology is not limited to just money transfers like Bitcoin. Thanks to an innovation we call smart contracts, computer codes are now turning into self-executing legal agreements. For example, instead of hiring a real estate agent when renting a house from someone on the other side of the world, you write the rule into code. The moment the money lands in the account, the digital key is delivered to the tenant. The system executes this automatically without allowing anyone to interfere. In fact, global financial giants have already begun tokenizing real-world assets, dividing real estate, shares, and even artworks into digital shares on the blockchain to trade them. In other words, we are looking at a brand new infrastructure preparing to swallow the trillion-dollar world of traditional finance. Of course, this transformation has not escaped the attention of governments either. Central banks are currently developing their own digital currencies, known as CBDCs. Concepts like the digital euro or the digital dollar are just around the corner. However, there is a very sharp distinction here. Digital currencies printed by states will still be centralized and completely under their control. On the other hand, cryptocurrencies like Bitcoin will remain decentralized, continuing to operate under code regulations that are independent of any authority's arbitrary decisions. In the future, we will live in a hybrid financial ecosystem where these two structures coexist. As global legal frameworks and regulations increase, this technology will shed its illegal associations and integrate completely into the daily lives of mainstream audiences. Yet, like every revolution, this technology has serious hurdles to overcome. Blockchain networks are not yet as fast and scalable as traditional payment networks. Furthermore, while the system offers you absolute freedom, it simultaneously imposes immense personal responsibility. In traditional banking, if you forget your password, you can call customer service. But on a blockchain, if you lose the seed phrase of your digital wallet, no one in the world can ever access your assets again. Therefore, stepping into this new world requires a high level of financial literacy. Today, blockchain and cryptocurrencies closely resemble the early days of the internet in the 1990s. In those years, those who thought the internet was just a passing fad meant only for sending emails could never have predicted today's massive digital world. This technology is rewriting not just money, but data, ownership, and the global architecture of trust. Remember, what we have discussed in this video is entirely educational content aimed at helping you understand the operational logic of this revolutionary technology and under no circumstances constitutes investment advice. So, do you think traditional banks and paper cash will completely disappear from our lives in the future? Don't forget to share your thoughts in the comments. This video you have just watched was only the first step in a highly comprehensive series where we will explore global finance and the nature of money. In the upcoming episodes, we will take a much deeper look at the power struggles behind the paper money in our pockets and global currencies. The role of precious metals like gold and silver that have not lost their value for centuries in the new digital age, and the future of the cryptocurrencies whose underlying logic we have just analyzed. Moreover, we won't stop there. We will also analyze how iconic financiers and visionaries who shape the financial world and manage billions of dollars in funds view the investment landscape, risk management, and wealth building, seeing it through their eyes. To ensure you don't miss the next episodes of this long-running series, where we will decipher the past, present, and future of money, step by step, and to take your financial literacy to the next level, don't forget to subscribe to the channel and turn on notifications. In the next episode, we will talk about why the US dollar is stronger than other banknotes. Hope to see you again in a brand new video.